Hey, Matt.
On a second.
How's your day?
Oh, busy. Busy. How's your day been?
Good, good. I heard you canceled your golfing trip.
Ah, yeah, that's like probably one of the least favorite things to do, right? Is to have to put off one of your favorite things.
Yeah,
But yeah, it just didn't work out. So I'm gonna try to go out this weekend.
yeah,
Finally warming up after a record snow dump here in Utah, right?
yeah. The it still remains a little bit cold. I mean, my clubs are still packed away, so
Yeah,
and I can't play in 50-degree weather. Some people can do it, but it feels like I'm hitting a rock.
yeah.
So,
Hey, congrats on your chess win for the
huh?
state of Utah.
Uh,
Something about second place in state of Utah or
that
something
was
like
a
that.
Utah amateur. Not a
Uh-huh.
big deal.
Whatever. Not a big deal.
Not a
You
big
know what's
deal.
funny? So I heard about this and I was like, gosh, I bet you there's some correlations to chess and like other skills that people have. And so guess what I did just for the hell of it.
You chat GPT'd it.
I did. And let me just read I'm not going to read the whole thing because it would take the whole meeting. But I asked it. So I went on Chat GPT-4, the one with the high human consciousness, and I said, what human attributes are correlated to being good at chess? And it gave me 1, 2, 3, 4, 5, 6, 7. But it also gave me this disclaimer at the front. It said, it says, these are the correlations, although, but not always indicating causation. So I was like, okay, whatever. That's the
That's
disclaimer. It
that's
says
good.
1, intelligence, 2, memory, 3, focus and concentration, 4, discipline, perseverance, 5, this was kind of like spatial ability, which I thought was interesting, which it defines, it says the visualizing the chessboard and pieces in one's mind is a crucial skill for strong players. So it's like your ability to like spatially handle things. And
Yeah.
this one I
See
thought was
ahead,
surprising.
basically see moves ahead.
Yeah, right. So like your ability, your cognitive ability to like make and see the future through so many instances. It said emotional intelligence, which I
Hmm.
thought was interesting. And then intuition.
Oh,
I thought chess isn't chess like a game of skill? Like you're not isn't intuition like the idea that you're like it's kind of guessing? Am I off
yeah.
with that?
That I don't know where that's coming from. I mean,
Yeah.
I
Yeah.
guess it could mean pattern recognition. You can get an intuition on a position based on patterns.
Huh.
So I don't know. I mean, I think one of those seven is probably one of my traits.
One. I was gonna say if we once we get a bigger
Emotional
following,
intelligence.
I was gonna once we get a bigger following, I was gonna ask the audience, which one of the seven most likely fits Todd's personality? Anyways, we should get started. Hey guys, welcome to the Trader Pulse podcast with your hosts, Matt Pohl, that's myself, one of the founders, Todd Tolman, our CEO of Green Chart. We've got an exciting round for today. Yeah, there's a lot that's happened since even Friday last week. And I think it's valuable just to bring that in, talk about it, but more importantly, make sure that you're right on the pulse of what's going on in the market with the most relevant events. So, Todd, any particular order or thing that's like, wow, I really want to jump into this first?
I don't know. I think we should tackle. I think we should talk about the real estate market
Okay.
nationally. I got something I want to show. I'll just throw it up real quick if you want me to start out.
Yeah, great. Let's see what you got.
So, yeah. So what we're looking at here? Can you see that? Okay.
Yeah, it's great. I can see it.
So this is Federal Reserve economic data. This is from the St. Louis Fed, and they keep track of home prices. So this actually they've been tracking this, I guess, since the early '60s, and I don't think this has been adjusted for inflation, but you can see that at the very beginning, you've got, and this is median sales price of houses sold in the United States. So back in 1964, the median, you could just say the average house price was $18,500. I remember when my parents bought their first house, and it was right around there. It was around $19,000. You can't even get a car for that anymore. But you notice that there's a steady climb over time, and there's a variety of reasons for this. There's an adjustment in nearing 2008. Here's 2008 right here, the crash. And then it recovered again. And then look what started happening in second quarter of 2020. We basically have a hockey stick.
Just crazy.
And so the median was 322,600. And then over a period of about 2.5 years, which brings us to the final quarter of 2022, it jumped up to 467,700. That's a $145,000 difference in 2.5 years. That's a 45% increase in 2.5 years. So what this tees us up for is a discussion about, how long can something so elaborate? I mean, if I was to break this down into candlesticks, like in our charts, this would be an emotional candle. You'd see a bunch of emotional candles together,
like that doji hanging out up.
Yeah, I mean, but look at right at the top here, just flatlined. It's flatlining. So, yeah, it hasn't moved. So, third quarter 468, and then fourth quarter 467. So it dropped. A little bit. It hasn't done that for 2.5 years. So in February, I think it said, I was reading, year over year, prices fell for the first time in 11 years.
Wow.
And so anyway, I just think this is a little peek into what's about to happen. I mean, if you look at the data,
Todd, I mean, do you think that's justifiable? I mean, that's really where my mind goes, is do you think, like, with inflation and with house demand, like, this is justifiable? And actually, like, some people are arguing we shouldn't have a correction at all because it's just marked into market.
Economists are mixed. And here's what's going on. You do have very high interest rates that were jacked up very, very quickly. Right. And at the same time, you have a low inventory. So on average, we have low inventory levels compared to the national average over the course of this, or over the course of several decades. But the problem is, if you have low inventory, then it supports a high price, because you've got several people that are putting offers in on a house. That keeps the price. That keeps, that the supply is limited when you got several people bidding on the same house.
Right.
And so obviously, if you got several people bidding, you think, well, prices are going to come down, right? Because you got to remember, people are trying to sell at the highest price possible. So the bidders are coming in and they're bidding higher so they can get the home. So anyway, I just think, I think that's a problem. I think the supply chain isn't gonna solve itself in 1 year. I think it's going to be a rough year. And as far as existing homes, another statistic that's real interesting is that 70% of all homeowners right now have mortgages with an interest rate of 4% or less. And you're not gonna, I'm not. Yeah. I've had a chance to move, but I'm going to stay right where I am because I'm in the mid-3s.
Yeah, well, I mean, you make a good argument, but I'm gonna corner you a little bit on this. Like, the factor that's not being discussed is the things that also move the housing market that we haven't had for years. Like, we haven't had unemployment at a sustainable level, which is more around the 4 to 6% for years now. Right. And we think that this all-time low unemployment is normal, because the job market is just going gangbusters, and we've just gotten used to this. Just like the market's going up, we've gotten used to this unemployment going down. Well, you can only go to zero, right? I mean, really.
Yeah, well, it's pretty low, but this is
so what happens when you double the unemployment, which is what the feds are targeting? They're targeting at least 4%. I've heard people say up to 6% in order to get this whole interest rate and inflation rate or current year-over-year inflation balanced. And so in order to do that, you got to bring unemployment up. So what's going to happen when these people lose their jobs? What's going to happen to their homes?
Well, I mean, you asked a bunch of questions there. So I'm going to say that when people lose their jobs, that takes money out of the system, which helps inflation. That's why the Fed's doing it.
Right.
Because if you have less people earning money, you have less people buying things, or you have people buying less things, and that tightens up the economy.
But doesn't deflation in the market also mean deflation in assets? And a home is an asset. The feds are targeting home values also while they do that. I mean,
yeah, well, naturally, if okay, listen, you lose a job, right? You lose a job and you can't pay your mortgage anymore. What do you have to do? You have to you have to sell your home. And if this is happening to a higher percentage of people at the same time, then prices start to tumble. And then you got to have buyers that are waiting in the wings to step in,
But that's assuming
but you still got high interest rates. So I think two things have to happen. Interest rates have to come back down and prices have to come back down.
Listen, even my ex has a second home. Even my ex has a second home. So, like, to give you some perspective, I think there are a lot of people out there, and this is just my opinion. I think there are a lot of people out there that have second homes, third homes, 50 homes that they're renting out on Airbnbs. And what happens when unemployment goes up, people don't have as much cash, they're not vacationing as much, the demand to go out and rent a house up in the mountains, right, that someone else's goes down. Like what's going to happen? And those, by the way, I just had this thought, but those homes were way overbought, and it doesn't even matter, right? Because they're renting it out every day, every week. And so their mortgage that, a normal person would pay, $2,500 to $5,000 for, they can afford $5,000 to $10,000 for, because they're getting daily, weekly, dual weekly rentals and still cash flowing like crazy. What happens when that gets cut in half?
Yeah, well, there's a lot of things that happen.
Here's what I want to show you this real quick, just to make my argument. And I'm not disagreeing completely, but I think it's worth at least pinpointing the opposite of the argument. I want you to see this chart. This is a chart, and I love the analysis here. Can you see this okay?
Yeah, it looks good.
This is new single family home sales rebound hitting highest levels since 2006, right? And this goes all the way into 2022. And I just want to see if you can see the same correlation I saw. And it's a little scary, right? One, it has to do with the marked recessions, but more importantly, it has to do with the red line and the blue line, which the red line is new single family home sales by the thousands, and which is the left scale. So the red correlates to the numbers on the left, blue correlates to the numbers on the right. The blue is existing single family homes for sale. So we've got new, we have existing, and just look at the last crash we had, 2005, 2006, mid-6, we hit the peak, right? We were at like 1,400 and like 6,000 on the blue side. So it's like you're kind of seeing this peak and then this massive drop off. And I actually did some research. I did some searches going back to 2006 articles, 2005 articles, and it's scary, the titles. They almost look exactly the same as today's news articles. Like, we can't keep up with the supply. The housing market has nowhere to go but up. We have to build X more houses in the economy. And then 2006 and 2007 hit, and somehow all those people found homes to live in. Somehow all those people had homes that they either downgraded in, or they moved back into their parents, or maybe they sold their second home that they didn't need. All their at that time, there weren't all these vacation rentals, which I think might be actually a major bubble that we're not counting for. But look at the numbers today. We're right there again. 6,000 on existing sales homes, right? Up to 5,000 with new, and we're saying the same thing.
Yeah, but look at the monthly. Look at your chart on the bottom. The month supply of new single family homes and the
It
month
looks
supply of
almost the
existing is going
same.
down.
Yeah, it's almost like, but yeah, look at that. We were at like all-time historic lows in 2005. We had no supply, right? On new, we had no supply of existing.
Oh,
And
I
then
see.
all of a sudden, we have tons of supply. There's plenty of places for people to live. It's just incredible how we get it so wrong. Where
That's
did all these
interesting.
people go live?
How the supply just went through the roof and then the sales went down. That's crazy.
Right.
So,
Yeah.
but I don't see that happening. We've got such high interest rates. Even the builders have to borrow money, and everything's cost because of inflation. Building materials are so much more expensive. I just don't see a big building boom coming. I really don't.
And we didn't have one. That's exactly, I think you're reiterating my point. Like, we hit an all-time low-level supply, whether it was building costs or people buying second homes, or at that time, it was all these homes that people could buy with no credit checks. And right, they were buying homes and renting them, buying second homes, third homes. And there was just no accountability for any of it. I think that was the problem.
Yeah. Okay.
We have the same problem now, right? We're at the same levels in 2023, but I think you're right. I think we have some new issues. Right now, we don't have the interest rates that we had going in through the 2008s. They didn't either, by the way. 2005 interest rates were higher than they were through like 2008, 2009, 2010.
Well, they had room to lower them.
Yeah, they had to. That's right.
They had room to lower them. We're on the opposite side now. We're hiring rates,
right,
to get out of inflation, but
but doesn't that reiterate the point?
Dead in its tracks?
Doesn't it reiterate, like, aren't we going to be worse off?
Yeah,
we have more supply and less demand with higher rates. Like, if I got to sell my home and move to California, I'm going to have to downgrade pretty significantly, right?
Yeah, well, I don't see
just because of interest rates.
The people are going the opposite direction.
All right. If I was in California and I had to come to Utah, it's like I'm gonna have to downgrade how much I'm spending on a house, because what I can get for 2% or 3% versus 5, 6, 7% in some cases, it's gonna get there's a lot less purchasing power. So we're definitely in different territory, but I thought this was interesting. I thought this was an interesting chart.
Very, very interesting chart. Yeah.
All right, moving on. Any other thoughts on that before we?
No, you're in commercial real estate. I just want your plug on. I just want to know what you think about where commercial's going. I know that in San Francisco, was it San Francisco? Somebody was telling me
it's one of the,
there's some bank-owned problems. There's a lot of commercial real estate is actually coming due, because they do a lot of short-term notes with commercial real estate, and you have to refinance quite often,
right?
Because it just works differently than single-family homes,
for sure.
And so I don't have the stat in front of me, but it seemed like there was a wall within the next year or two where there's a ton of commercial loans that need to be refinanced.
Yeah,
but what happens when you've got rates that are so high and you've got such high vacancy rates right now? I mean, these buildings are empty.
Right. No, for sure. Up to over 50% vacancy rates in some
cases. I think commercial's what's going to start the tumble.
So I'm going to put my tinfoil hat on for just a moment here and first ask a question, and I'll give you my tinfoil hat observation. But why are we talking so much about commercial real estate? The headlines are filled with it. But like this thing that you and I just talked about isn't hitting a headline anywhere. The correlations between 2006 and now with the supply and housing market, the the radical climb that if you were to draw a mean average across, we're clearly over the mean and there's a correction due. Why are we not talking about that when that has to do with the average day citizen? But yet we're talking about commercial real estate, which is mostly hedge funds, investment banking, banks that own that. Like, why are we
pension funds?
Yeah, these
pension funds are heavily invested in commercial real estate.
So
can you imagine if that falls out? I mean, now the pension funds affect regular humans like you and me.
Yeah.
Right? Not
so here it is. Here's my controversial statement for the evening. I wonder if there's some protection being provided by the disclosure, like we're prepping the public for their losses in these funds. We're prepping the public for their losses in their Vanguard real estate funds and their BlackRock investments. And we're doing it in a way so that's like, we told you it was happening. We were warning you. And then it happened. And it's like, oh, well, then all of these companies that made all these predictions are off the hook. Well, all the while, the thing that's going to affect most people, I would say, is actually going to be the residential side. And it's like this quiet thing happening underneath the or behind the curtain.
So as this starts to unwind, what does it do to the dollar? What's your opinion?
Oof.
So if I'm trading the euro, I mean,
well, I don't know if there's a trade there. It might be neutral because I don't see this not impacting the rest of the world. I don't like the same problems BlackRock made. So it was BlackRock that made some bad investments, and they're not bad. They're just bad now because of what's happening, rates increasing. But yeah, I mean, we're talking millions and millions of dollars that they've just given back to the banks and said, sorry, no recourse loan. We're not interested in paying this back. In fact, this last week, we saw a real similar like bank buyback or whatever you want to call this handing the no recourse loan back to the banks. We saw like another in the tens of millions early this week. And so when you've got a no recourse loan, your rents aren't paying for the building, and they're made by these huge investment firms, what's the incentive for them to keep it? There's no person on the line. There's no person that says, well, I got to really make this work. And instead, it's these investors who have, and qualified investors, mind you, but they're these investors that have put their money in, and now they can't get their money out. In fact, I've heard there's a list. I've heard there's literally a list of people trying to get their money out of these funds. And that's actually part of the run. It's part of the run instead of the banks.
Yeah.
It's the run on the hedge funds. And they're having to sell for losses just to give depositors their money back at a loss. And I think that's just the first domino, because you start this thing and they put more pressure to sell and sell and sell. What's going to happen to the price of commercial real estate? I think that's an obvious one. I think there's some great trades there. For those of you who are in the real estate market, I think there's going to be some great buys in commercial real estate. I don't think we're seeing the worst of it because most of those loans, those 3 to 5 year loans, are coming due next year and the year after. And when they do, and they have to refinance at this higher rate, it will not make sense for them to keep their doors open.
Yeah.
Yeah, there you go, huh? So what else did we have? What was one of the other big things that we had topic wise?
I think we probably ought to talk about ChatGPT.
We're running out of time already, but let's do that.
Well, I got something to show you. We'll just poke at it, and maybe we'll have to finish this up on Friday.
Yeah, let's because of time, let's poke, because I think there's no way we can not cover this, but Friday, let's do a full recap on this. I really like that idea.
Yeah, I don't know if you've seen this, but I was looking at Bloomberg the other day, and there's 2 research studies that they report on here, and they claim that they can decode Fed speak using ChatGPT.
Wow.
And predict stock moves from headlines, but not only stock moves, but basically decipher whatever the Fed says is dovish or hawkish.
Wow.
Yeah,
I
had a little bit of information on that. But yeah, it's wild. Just a couple high points. We don't have time to go into all this, but basically the first study, let me just read a couple paragraphs to you. I think it's real interesting. So the first paper was entitled, "Can ChatGPT Decipher Fed Speak?" And the two researchers from the Fed itself found that ChatGPT came closest to humans in figuring out if the central bank statements were dovish or hawkish.
Wow. And you know what? That makes perfect sense.
Now listen,
They're emotionless.
They've
got no emotion to interpret this.
Yeah. Well, it goes more. ChatGPT was even able to explain its classifications of Fed policy statements in a way that resembled the central bank's own analyst.
Wow.
Anyway, that was the first study. I thought that was interesting. And then the second study says, can ChatGPT forecast stock price movements? Are you interested in hearing this one?
Yeesh.
So anyway, they name, I can't pronounce the person's name that did this study, but they prompted ChatGPT to pretend to be a financial expert and interpret corporate news headlines.
Wow.
They use news. Now, what's interesting is that ChatGPT doesn't have any data after 2021. You knew that, right? It's
right.
2021, and before that, it has data. So what they did is they took news after late 2021, a period that wasn't covered in the chat box training data. The study found that the answers given by ChatGPT showed a statistical link to the stock's subsequent moves, a sign that tech was able to correctly parse the implications of the news.
Sheesh. So what are you recommending for traders here? What would be like a big
okay, this is gonna sound really crazy, but I think our entire financial economy is going to be completely rewired within the next 6 months. I think in the next 6 months, we're going to see such a huge dislocation in the workforce than we've ever experienced in the history of the world. This is going to be really difficult because AI, artificial intelligence, even though I think that's an oxymoron, it really should be machine learning. A machine doesn't really have intelligence. It just knows pattern. It recognizes patterns very, very well, and much better than we as humans can. And so I think anything that's pattern driven that requires, auto GPT is another thing that just came out. We can talk about that Friday.
Yeah.
Where it actually, you can give it a goal. You can say, find me the best gas price, in Utah. Find me the gas station with the best gas prices. It'll go out. It'll start by writing its own post queries or sub queries. It'll start asking itself questions.
Gosh.
So you don't need to keep, with ChatGPT right now, as you can type a question, it gives you something back, and then it's like, well, I'm looking for something different. So you type another question. You send it out, it comes back with something a little tighter. Well, Auto GPT just keeps going. It just keeps writing its own questions until it comes back with the original answer you were looking for.
And just a fun plug, Auto GPT. So this thing has evolved so fast. I think this is why this is news. One, if you're a trader or in any type of financial market, even as an analyst, and you are not up to speed on ChatGPT or OpenAI, you are going to get left behind. It is moving so fast, guys, and we're committed to keep you up to date on this stuff. But it is moving so fast. We went from a AI that answers questions to an auto AI in the last week that now is setting out agents to ask questions on top of questions and working with each other to is this the best result, and spinning it and spinning it and spinning it, to now this Auto GPT that you had to kind of be a coder. You had to know how to tie into an API and program things in. They've just created one that's web-based for the person who has no idea even how to code. So that article you just put out, how to search for sentiment on a headline, you could go to this, it's called Agent GPT. You could go to Agent GPT and type it in and ask give me the sentiment, and it will do it. And then you could say, and also every time this comes out over the next week, send it to me. Send me live. I want to know live sentiment happening over these networks and and they can search the web now. What I will say though, as kind of a
that's a really good point, because ChatGPT was not hooked to the web. it was limited in information up until 2021, but AutoGPT is connected to the web.
Full
and has the
access.
ability to get accurate current information. And this is moving so quick.
Yep.
I don't know. I think it's exciting in many, many ways. It's going to help humanity solve a lot of problems.
But
I think it's going to open up the door for more problems.
But traders wake up, right?
Yeah.
Because it's like, I have software on my computer, on my computer that's still Windows only, right? It won't even work on a Mac. I have software that looks like I'm running Windows 7. Like, that's how old trading is. And the people in trading, guys, they live in the dinosaur age. No offense, Todd. But what I'm saying is, if you get on this tech, what an advantage we have as traders. Like, really, right? Like, there's some huge opportunity to make some money in the market with this tech. And if you're not following this, you are going to get left in the dust. And what a disruptor. We're going to see. I mean, we should talk about more on Friday, but
we've got some serious, the world has some serious questions to answer right now.
Yeah.
And it's almost too late, I think, in many ways. That this the questions that should have been asked and answered,
it's too late.
Should have been asked 5 years ago.
Yeah, I know Elon said that we should be regulating it. We'll talk about that more on Friday, I think. But guys, ChatGPT, OpenAI, there's just no way to ignore this. If you're a trader in the financial markets, if you are not currently in it, playing with it, don't get left behind, right? Wouldn't you agree, Todd? Yeah. Gosh, this goes so fast. What is going on?
Yeah.
Well, it's fun. Any last words before we jump off, Todd?
No, just thanks everybody for joining us today. Like Matt said, we got a lot of very interesting things to talk about on Friday. We just don't have enough time to talk about AI today to the extent that we want to. So we're looking forward to exploring that deeper on Friday.
Yeah, and like always, follow us on LinkedIn, Instagram. Hit the subscribe button. That's how you guys support us here. And we'll catch you guys here on the Trader Pulse this Friday. Thanks, Todd.
Thank you. Have a good evening.
See ya. Good night.
Bye.